ProfessionalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Frivolity, our daily brief video. It is, where are we here? Friday, TGIF, all that. 9 o'clock on the West Coast, the 7th of July. Actually, technically, we're heading out of that holiday weekend environment now. On the backside, did listen to a couple sort of YouTube commentator kind of guys talking a little bit about the thin holiday trade here through this week. So not really a big surprise. And actually, interestingly enough, I think, I don't know whether I put it, I know I put out that tweet a while ago, but it'll probably take me forever to find it. But I had put out a one of the sort of YouTube commentators, and I think it basically makes sense. In the sort of end of June period, beginning of July, if you have the market up quite a bit, should we not expect the market to pull back a bit? Quite a bit, sort of first week or two of July. I think it makes sense. Of course, yeah, this was the one that I like listening to this guy. He's got a fairly good head on his shoulders. Anyway, this image here, I don't know whether you can see this or not, but QQQ's 20% above 150-day moving average for this particular guy. He likes this moving average. You can see what usually happens and how long does it take to happen following that kind of event. Yeah, usually there's a pretty substantial correction. And I think that's what's going on here. The econs that we had coming out of yesterday were a bit surprising. The private payrolls number was very big. In fact, I don't know whether I recorded it myself. Yeah, 500,000 ADP. That's a private. 497,000 workers. So this isn't, keep in mind that the US government data is highly susceptible to finessing, maybe we'll call it. Manipulation outright, maybe we'll call it. I don't know. But anyway, these private numbers, they came in very, very strong. And I remember when I first got into the market back in the 1980s, we used to consistently see jobs reports coming in, 500,000 jobs created, 750,000 jobs created, just like stunning numbers. And then as we went through the 2000s, the baby boomers leaving the economy, leaving the workforce, we got to the point where you almost saw like no jobs reports ever reporting 500,000 new jobs created. So that was a bit of a shock yesterday. And I guess, the general impression, and now, of course, actually, I spent a bunch of time over the past couple days. Yesterday was Julian's day to talk to you guys. So trying to put together new short-term interest rate models here. Of course, our beloved euro-dollar model got killed by the powers that be. So trying to figure out these SR3. There's a weird symbol to use. I don't even really know the appropriate name. It's interesting is my time-tested site. This is when I used to be a commodities broker and the internet was brand new. It's funny how these guys really haven't changed their website at all. It's basically still 1990s, 1980s website. Anyway, I always like to use these, and you can see there is the euro dollar market, but this is basically dead now. And now we are using this 3-month SOFR. What the hell exactly SOFR stands for? I guess this old dog's got to be taught new tricks, eh? Is interesting, the open interest. These are probably the numbers that we need to follow most. And if I understand correctly, if this is a 3-month paper, then the reason why you still see April and May is because this is a 3-month contract. And if it expires in April, then May, June, July, technically this thing doesn't end like the actual 3-month deal. I think it doesn't end until the end of July. So I think that's why they're still having these things on the screen. You can even see there, see July 6th, July 6th. This is a bit odd that that's still trading away. So this is going to take a little bit of getting used to. The way I would interpret this is let's use the heaviest open interest contracts. I don't know whether you need to spend too much time and effort concentrating on the sort of non-quarterly contracts. Whenever you hear me barking about quadruple witching, right? Because the institutions and big players in the market, they typically use the June, the September, the December, and the March contracts. Those are their big ones that they use. And you clearly see that in the open interest here. Anyway, so this is what we're going to be using to sort of gauge short-term interest rates. And this is what that chart image sort of looks like. The yellow is the Fed funds rate. And then the teal and the orange here are September and December contracts going forward. So they're still trading at a little bit of a premium to the Fed funds. I think that's kind of an interesting tell. On that private number that was released yesterday, I think everybody and their brother was absolutely convinced that the Fed is not only going to raise rates, they might raise rates 5 more times, right? Given the strength of that number. And then you see mysteriously that this is yesterday's data. Then you see today, the print is, and this is the big, the non-farm payrolls, U.S. Government issued data. Well, the number came in plus 209,000. So substantially lower than that 500,000 number. And even below expectations here for what the market was looking for out of this number. So that, in essence, completely reversed the entire conversation about yesterday, like completely reversed it. So did the stock market sell off yesterday because of the horrific data? I'm sure the powers that be probably knew that this government reported data was going to be weaker. And I guess the whole point of where I'm going with all this is I don't really think that it had a heck of a lot to do with the actual data itself. We had been talking at length last week about how technically we had carved out this inverted head and shoulders, and the inverted head and shoulders objective was traded to nicely. We also ran into a key horizontal support and resistance line, basically an old high. So lots of market participants, they like to simply fade the test of these highs. Think of this as your liquidity pool. You hear lots of sort of social media commentators talking about liquidity pools. And then we went after the stops, right? A whole bunch of easy orders to get filled on a move through that high. And then the market just sort of parked itself for about 3 or 4 days. And then we actually went in and put a little double top in there. And then that sort of set the stage for the meltdown that we saw yesterday. So I get the impression that this was more of like technically this market had just gone too far and it was exhausted. It just simply ran out of buyers. Everybody was long. Nobody was short. And it was just sort of like the market just needed an excuse to break. And it used that private payroll number as the excuse. And we dumped hard. And what was interesting was listening to all the social commentators and stuff going on about how everything was red. I mean, just everything right across the board. So that in itself, when they were just, there was just nothing green at all yesterday on this dump into these key levels. We had sort of pointed out on the site that we had Mountain Man level there staring us in the face. We have all these tails, candle body lows for trade location. Gee whiz, you would have looked like a genius had you just scalped that low there. And then it was sort of like, as the market was dumping down into here and the sentiment was just horrifically negative, then all of a sudden just the sellers just stopped. It's just like everybody that was going to sell sold and everything just started to firm up. And now we're actually at the point where, hell, there's a double bottom now working on this thing. And I suppose you could probably do things like fog and bombs heading back up top. And whoa, what a surprise. 2.618 is going to do nothing more than just take us right back into the most recent fail level. Candle body highs for trade location, right? Keep an eye on that. And of course, the original M structure top, that is the double top fail level. I wouldn't be surprised if this stock market works its way up into this peak here in the not too distant future. So my feeling was that yesterday was nothing more than just a technical break. The market was just too overextended. Suppose we could probably also look at things like Willie was stupidly overbought on the 4-hour chart. Those kind of things. That should be a warning sign to you that, hey, should I really be a buyer up here? Maybe not. It doesn't necessarily mean that this is a bear, but just if Willie is stupidly overbought, maybe not the best time to actually pull the trigger. And sure enough, proof of the pudding's in the eating. Price had to come off. So now it's Friday. We're heading into the weekend. We're getting through this first 2 weeks. Keep in mind that the first 2 weeks, we want to be concentrating on where money is flowing into and out of in the market. Did have students in the past that sort of said, well, Brian, when you got your price charts in the mail and you had to talk by broken, 2 cans and a piece of string between the 2 cans to communicate back last century. Yeah, maybe it took 2 weeks for the fund managers to put money to work. I would say, and they did studies and stuff that sort of suggested that maybe we can just concentrate on the first week. I would say because of the holiday weekend, you notice it goes 20, actually there's the 3rd of July. Let's see if I can get that a little bit better. Nope. Okay, so 3rd of July to 6th of July, we just don't have that much data to work with, right? So there's 3rd, there's 6th, obviously today. This will be added to the data. Where do the fund managers think we are? I think with the holiday, this just isn't enough data. We're probably going to have to wait till the end of next week, but interesting to see materials and energy coming off here. We were conjecturing that maybe this part of the market would start firming up here at the beginning of the new quarter. But anyway, we'll see how it goes. As it stands right now, communication services, utilities way over here, and then real estate way over here. Kind of a mixed bag of messaging. And actually the exact opposite of what we've seen recently. What's interesting about this too is that some of the gold stocks and even energy for that matter, they're actually looking extremely uppy here now. So I don't know whether I actually can really believe that. For instance, and there goes the stocks. You can see they want to rally here. The oil itself, what scares me about this is if we start looking out now on things like the daily price chart, what letter of the alphabet is that? Uh-oh. And if that's the case, then we can start drawing chaos theory and upside objectives and where should we expect oil to go to. And it looks to me like they want oil to go up, back up and test this liquidity pool up here. And if you think like chaos, right? If this is a trending market state, So the market will be, all right, I'm getting a very clear message. I want to move up. And then once we get up, kind of like what I told you with the stock market, liquidity pools, that high there, you're actually going to get some people that come in and sell, which will probably inject a bunch of chaos into the market as you have the trending people going one way and the fading people going another way, hence the concept chaos theory, where we should see a bit of back and forth. So this doesn't really bode well for our gas tanks latter part of this summer here, which sucks. You know, this way I have a little bit of a jaundiced eye with that data that we saw so far out of the first 2 weeks, because I don't think that this is where we are in the economic cycle. I'm not quite sure why this report looks the way that it does. It looks like oil's actually been quite uppy over the past few days. And also, too, I've noticed that things like Schlumberger, which is the world's biggest oil services stock, noticed it was perking up. I mean, look at that move today. Geez, a 6.5% move on the day. Damn. They always say oil, you know, stocks lead the commodity. So if the stock is up 6.5% today, that probably means that oil wants to go higher. I was also telling you a little bit about Rig. That's also another oil services stock. And you tell me, does that look bullish? Ay, caramba. I don't know what was it. Do we have a, can't remember exactly why I was talking about this recently on the site. I don't know whether we had a key reversal here or not, but what this does look like to me, again, another oil proxy. If we can think like bot setups, do we do 33? Yes. Did we go beyond 66? No. So that means bots are alive. And do I have 3 higher lows to work with? So I got 1, 2, maybe 3. Interesting double bottom right off of that level. And look at that darn thing go today. Holy Jesus. So this kind of, when I see something like this, oh boy, sure looks like oil prices are heading higher. This is the one thing that should actually slow down things like tech stocks, because usually in the market, there's a debate between where fund managers are going to, or sort of purchasing managers for companies, if they have to go and spend more money on oil and energy and gasoline and electricity, then they take money out of purchasing things like technology improvements to improve productivity. So we'll see how that goes. We're getting pretty big bullish bets out of the oil market here. So what's interesting too is that the gold market is firming up. Gold's been on quite a slide recently, but you can see it's trying to double bottom. If anything, what this looks like to me is your classic kind of like Wyckoff check against the lows. So if we go reload zones, 78.6, Brian's favorite fib. What a surprise. Market basically traded to that level and then took off. Also, we came and kind of filled the gap in with a tail. I wouldn't consider that gap totally full, filled. At some point, we probably should come down and put a closing bar in there. But it doesn't surprise me that gold's catching a bit of a bid. And seasonally, actually, over like this August period is usually when gold actually turns back up. So I suppose if oil jumps up there, maybe gold has to take a bit of a pause and go sideways while the oil is racing up. But that oil racing up will be inflationary, which will translate into higher gold prices down the road. So there's your backdrop for the commodities. I suppose heading into the weekend here, probably the thing that really jumped out at me today the most was, again, sort of, I think the whole market kind of got lulled into, oh my goodness, the US dollar is going to go absolutely crazy here as the Fed continue raising interest rates. So it was interesting how yesterday US dollar index was pressing higher, and then on that government report that showed that not nearly as many jobs as were created as that private report said yesterday, boom, 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 in comes a double top fail, and the US dollar index is breaking down. So in a weird sort of way, this actually should be good for stock market and risk proxies. It should be good for things like gold and, of course, commodity prices in general. Did hear overnight, I guess, two sort of macro global things that kind of surprised me. Yeah. All right. Thank you, sir. First thing that jumped out at me was, I don't even know if Biden can even do any public speaking anymore. I'm hearing a lot of people on sort of social media saying things like Biden can't even do public speeches anymore. He's in such bad shape. But I did see that Yellen was sent to China. And I don't think the conversation went very well. I've never believed Yellen has never been a good sort of public speaker. She's never really been a good, she's not a diplomat, that's for sure. And she's not a politician, that's for darn sure. She's a lifer. She was basically, started in the mailroom at the Federal Reserve and worked her way up all the way to the top job kind of idea. And she went to China, I think, as sort of like, maybe we'll send Yellen over, because remember Biden right now, he's having a hard time just even putting two sentences together. He sent his Secretary of State over. That didn't go very well. Then he sent his Treasury Secretary. That didn't really go well. And so that's something that's, if the Americans go and piss the Chinese off to the point where the Chinese are like, we're just not going to buy your US government bonds anymore, well, you might see that this whole world hegemony shit starts falling apart. I mean, is it a bunch of just sort of political rhetoric and dancing right now? Who knows? But it was interesting to see. You don't often see that a US politician or, government representative goes to China and actually gets into a shouting match with them. That doesn't usually happen very often. She did sort of leave off the trip with sort of like, yeah, we all got to try and get along a little better, that kind of stuff. But it was a little bit surprising, to be honest with you. The sort of the rhetoric coming out of Yellen about how China needs to treat American companies a little bit better. I think she's right, but that's not the way you're going to get the Chinese to buy more US government bonds. That's probably how you're going to get them to buy less. And then, and I don't necessarily buy into the whole BRICS idea, but at the same time, too, China is in desperate need for cheap oil. Of course, Russia is doing a great job giving them all the cheap oil that they need. Russian oil, though, is dirty oil, and a lot of the infrastructure in Russia is starting to fall apart. So I don't know how dependable that is. But the Saudis and the Chinese have warmed up a little bit more. And we might find that maybe we flip over where you get the petro yuan, which might be a case. You never know. It is crazy world. The irony of it all, of course, is that the Americans don't need the Saudi oil anymore. Half of the reason why they put up that whole sort of infrastructure in the Middle East and, defending the Persian Gulf and all that crap was because the Americans were so desperate for the Middle East oil. But with the Balkans and North Dakota oil and all of that, and shale oil and all that, the Americans don't really need the Middle East and stuff. And you ever listen to that Peter Zahn guy? He's kind of like, the Americans are just told the world to go screw themselves. So anyway, we'll see how all that plays out. Are sort of the sands of change shifting? I'll tell you, I wouldn't be surprised that the US dollar here, well, just in the short term, I suppose we made a new high yesterday, so I don't think we're done here. But over the longer term, I wouldn't be surprised if actually the US dollar over the next 5-10 years comes under pressure, along with all of these Western currencies. And sort of why do I say that? Where am I going with all that? Well, of course, we had just the day before yesterday. I think it was, well, maybe it was yesterday. I can't remember. But your friend and mine, the world's biggest fink. Are you allowed to say that? I don't know. I don't really say politically correct stuff. I'm sure Alan doesn't like me very much, and et cetera, et cetera. But anyway, Mr. Fink came out and basically said Bitcoin is an international asset. So there was actually a gentleman who does up big long videos about the Canadian economy and all that kind of stuff. I tell you, and of course people aren't going to like this, but I was quite surprised. You know, Mr. Fink, of course, was one of the major champions of this whole ESG movement, which frankly speaking, I think is a load of horse shit. But anyway, politically correct woke worlds, right? Do you define yourself as a houseplant, all that nonsense? But of course, it served his investment purpose as well. He was long a bucket load of Tesla, and of course, Tesla's all about ESG and all that nonsense. What I found really interesting is about halfway through last year, and remember that's when Tesla topped out, and sort of that was the end of that silly, sort of COVID world investment sort of world, and things have sort of started to go back to a little bit to normal now. He actually came outright because he had already sold all his Tesla stock and all of his sort of, ESG bets. And he had come out and publicly said, well, you know what? BlackRock Capital has no comment on ESG anymore. It's entirely up to local governments. And hopefully, I don't know whether you've seen it or not, but the whole ESG movement is completely falling apart here. I mean, yes, political entities will hold on to this stuff as long as there's some capital there, i.e. Votes and stuff. But what I found fascinating is he has now shifted his conversation. I mean, this guy does not go on now the big CNBC stations and all that, because keep in mind, all the smart people watch CNBC. I mean, he doesn't go on and do this and publicly come out and endorse an idea like Bitcoin unless he has a vested interest in this. And my hunch, of course, is that, he and BlackRock and all his cronies and stuff, they want to dominate the ETF space for Bitcoin down in the US market. And I think he's positioning himself. And when you hear this guy publicly come out and say Bitcoin's an international asset, what that's really saying to me is, sorry, US, you may think that you dominate the world and whatever policies you put in place in the world, but that's not the case. And you might actually just be left behind here. So to that end, I'd have to say that this actually might even be a bit of a watershed moment for crypto. We could look back years and years and years from now and make reference to this. I think what he's saying here, and this is the scary part about this, and if you listen to his words, he basically said that we have actively promoting Bitcoin as a hedge, and that he sees international currency devaluations coming. I mean, he's telling us. And, the interesting thing is we have people on the website and stuff who do lots of astrological work, and based on the astrology and stuff, there's supposed to be some really big, ugly stuff coming down the pike in 2027, 2028. I've shown you this report repeatedly because I believe that we are in just about exactly the same part of the long-term cycle as we were coming out of the Second World War with that great reset. And of course, 2021, 2022, we had that inflation spike exactly like they had in 41, 42. But what's really scary about this is 46, 47, looking in 1947, you had the inflation rate after coming all the way back down to zero. And you're going to hear the central bankers declare victory and aren't we so wonderful? And look at the great job we did. And all right, we can start lowering interest rates. All of a sudden, inflation just goes absolutely crazy again. And what really concerns me too is I'm also hearing some of the sort of Canadian bureaucrats saying that they're going to have to start mandating masks again because nobody's getting any booster shots. Nobody's going and getting more sickness shots and stuff. And they're going to have to, I wouldn't even be surprised, to be honest with you, that there's like a sickness part two, like World War One, World War Two. There's going to be a sickness World War One and a sickness World War Two. And the second bout of it is going to be like twice as bad as the first bout. So, all right. So that's probably the best thing to leave off on for you guys is, and you already know all this. I mean, I'm just sort of stating exactly the same stuff over and over and over again. But I thought this was a very interesting event. He's basically told the world that Bitcoin is here and it's legit and it's the poop. Now, keep in mind, he wants to buy down markets, right? He's an institutional player. Will he use the SEC and of course old man Biden, who's kind of going senile in office right now, to try and beat up on crypto? And of course, obviously, he wants to put guys like Binance and stuff out of business. It was interesting. Little bit of FUD out of Binance yesterday, and everybody all started freaking out and stuff. But I guess what I'm kind of noticing here is, very much like the stock market, same sort of thing. Bitcoin did pull back a bit. And if anything, how can you tell Mr. Fink has entered the market here? I mean, we've got FU moves all over the place. Just coming out of the weekend, they ran the market up through the recent top and then only to just run the market out through the recent low, just kill everybody. I actually think heading into the weekend, things are kind of stabilizing here. You can see where the algo recently turned negative. I don't know. I mean, we might have the algo turn back positive here. I don't know. One thing I will say, and it should make for a fun weekend, was I did see quite a bit of green on the altcoin space. And of course, they've been under a lot of pressure here recently. But if we even look at things like this was one name that one of our site OGs really likes down in here. I mean, W's at bottom ends of trading ranges. Now we're getting moving average crosses. Nice little W in a moving average. Whatever you see that's uber bullish. I noticed some of these AI names. I think this Ocean is an AI name. He's starting to perk up nicely there. You can see the double bottom. So we might actually have a half decent little weekend here in crypto land. The FUD about Binance was just nothing more than FUD. Mr. BlackRock there has, I think, like publicly put in a bit of a bottom in the market. And, I've talked to you guys lots about this of late, that here was our Brian's birthday, and you better be careful, seasonal window, sell in May and walk away. Brian went on vacation thinking that the market would not come back until we got into July. Mr. Fink, of course, kind of screwed up my vacation plans. Thank you, sir. Big rally, and then we've just kind of gone sideways, but they keep perking the market up to new highs. So I don't really have any sell signals here. If anything, this is another one of these kind of things where pullbacks are buying opportunities. And as long as these moving averages on the weekly chart are still pointing up, I don't really see any sort of bear market here. We've got through the seasonal weakness window, and now through sort of the latter part of July and usually well into sort of September, usually the crypto market does relatively well. And so, this Hex is a good example, huge rally there through the winter and spring, brought the market right back down to the bottom. But can you see, I mean, you think that Richard Hart guy knows about W's? I mean, you can see what this one's like, a W within a W. So you can see them all coming in. I showed you that other one just a moment ago. Zugi's name. I mean, you can, and Ocean, as an AI name. Probably this Rend is going to start spitting out bots. I told somebody recently that I don't really, I couldn't buy this here now, but 1 low, 2 lows, 3 lows. If this thing can turn back up, and you notice how it's counter trend rally, that's going to set up bot setups. And of course, that, if all this does play out, takes us up top. So I can see there are bottoms trying to come into these markets, and really seasonally, this is actually pretty darn appropriate. So get ready, folks. Should be a fun weekend. There's the Bitcoin up about $500 on the day. I don't know when the if and when the there's a mess for you. We won't get into this. This is a 30-minute chart. I don't know when the algo will turn back bullish. Of course, I'm not in the game of predicting this, but if it does turn back bullish, then we'll hop back on the long side. As for now, I don't really have any setups working in Bitcoin. They were running the stops on the short side. They were running the stops on the long side. And if anything, if I was going to take a cue off of Bitcoin heading into the weekend, I might just watch this little inverted head and shoulders. And if that does pop out, then that probably tells you that we want to head higher. It's pretty straightforward. Show me a new high and I'll show you a buy. A lot of these altcoins, though, like I said, they're starting to look cheap. And you might, like, if you're fairly light on your toes and you're a buyer of W's, there was one KMD, which I was getting all excited about last week. And it looked to me like the absolute perfect sort of scenario. Yeah, there's the double bottom, broke out. You tell me, is that the kind of name that might get Brian's interest here? So, caveat emptor, but the good part about it is we should be through this seasonally crappy part of the year. And we should be actually starting to set ourselves up for new bull runs. This is another one that I know Sjord likes a lot. That root. Look at that chart, eh? Doesn't that look pretty? So, get ready. Here we go. Summer silly season is here. Party, party. All right, let's head on over to the after party. I'll answer a few questions that I saw posted. It is the middle of the summer, so it doesn't really surprise me. A lot of our OGs are like, I'm on vacation, Brian. I don't really want to come and blab away with you guys. So we don't have any special guests this week, but we'll just do a short Q&A session. And if somebody does want to come in and ask a question, feel free to post in the DB request room. And we'll just do sort of an AMA session here today. All right, let's leave it at that. Have yourselves a great rest of your day. PMA for the win. And I guess we'll see you all on Sunday on the free show if you are so interested. All right, all the best and bye for now.